Hello, and welcome to this panel, Putting the Engineering in ESG Investing. My name is Claire Kennedy, and I'm thrilled to be your moderator today. And I'm also thrilled to be joined by our panelists. Giselle, Commissiong, Senior Principal at Hatchery. Welcome, Giselle. Brad Saville, Professor of Chemical Engineering and Applied Chemistry right here at U of T. Welcome, Brad. Nicole Vadori, VP and Head of Environment at TD Bank. And joining us on screen is Ron Mock, former President and CEO of Ontario Teachers' Pension Plan. Now, I've got a lot of questions for our panelists, and you may have some too. But first, I want to pose a couple of questions to you, our audience. So those of you who are here with us in the MyHealth Center can answer by a show of hands. And if you're joining us virtually, please use the poll function on the app. So first question, is ESG investing relevant to you? Could be relevant in your personal capacity, thinking about your own investments or retirement, or professionally, because ESG is important to your shareholders or clients or other stakeholders. So, is ESG relevant to you? Show of hands here in the audience. And I'll get those poll results in a moment. But let's go to the second question. How many of you think that the engineering profession has a larger role to play in ESG investing? Okay, good. That's a good number, and we're going to wait for those responses online. But I think we have a lot of people that are for whom ESG investing is both relevant and who think that the engineering profession has a larger role to play. And we'll hear more about that from our panelists. I want to start off with our panelists with a question for you, Ron, kind of a level-setting question. Can you tell us what is the state of play of ESG investing and where's it going? That's a big question, but I'm going to ask you for a succinct answer.
Hello, can you hear me?
Yep, we hear you loud and clear, Ron.
Okay, excellent. Now, sorry, I just broke in. Am I okay? Can I?
Yeah, so the level setting question is, what's the state of play of ESG investing today, and where do you see it going? What do you see the trend line is?
Thank you very much. Sorry, I just jumped in here. First of all, thank you very much for having me this morning. It's very exciting to be here to participate in this conference. Investing. State of play is one that is incredibly active, and it's incredibly active globally. I'll start quickly with the sources of money. Large asset managers around the globe. And I think if I did a quick addition, I'd probably get to 11 or 12 trillion of assets that are definitely focused in this area. Pension plans, sovereign wealth funds, large asset managers, banks, all of them, their boards, their constituents are all very, very aware of the importance of ESG and the challenges that we're facing. So there's a very, very clear understanding of what's needed. Companies themselves that you invest in or we invest in definitely are also well aware of ESG issues. And it's broadly across widely accountable asset managers. And by that I mean publicly traded or pension plans with large constituents. They understand that ESG is critically important, and it's important to society, but it's important to the risk management of the assets that they manage. This has really evolved rapidly over the last decade, but before money ultimately flows, it needs a framework to flow through. And that framework has been getting established over the last 10 to 15 years, starting with governments at the highest level, federal, provincial, down to municipal. This is about policy, setting goals, setting targets, agreeing on global or buying into global agreements and arrangements, Paris, Glasgow, et cetera. And providing the incentives. So knowing the goals is really a policy issue. And where the money flows, it needs to understand how that's being set broadly. It ultimately then needed a framework. And the framework has come in the form of many, many organizations around disclosure and sustainability disclosure, which is critical. And we're starting to see that come together very rapidly with IFRS recently has put together a sub-board, which is the International Sustainability Standards Board. That is setting across, I think it's 114 countries, disclosure requirements for ESG issues. That framework is giving this money and investing motivation a clear framework to start to work under. And so this has, it's been going on for 10 to 15 years. I know in the boardrooms that I sit in and the companies that I've been involved with globally, this is now becoming absolute table stakes. This is about execution, but it's absolutely about table stakes. At all levels that I've been involved in, whether it's the policy framework at government levels, whether it's on any of these or in inputting to any of these organizations, IFRS, SASB, TCFD, any of them, there's been engineers at the table along the way. They may be engineers working in policy areas, they may be engineers working in government. They're not actually out in the field researching and doing other things, but they definitely have a handle on the problems and are part and parcel of putting the policy frameworks together. The accounting and legal world definitely has been involved in establishing these frameworks and these policies. But you're seeing, and I've witnessed in the last decade, a lot of money flowing into areas where clearly it's being put to work to support ESG. There is a long way to go, and I actually think the engineering community is just getting started in this process in terms of what
that is a perfect segue, Ron, to our next question. So thank you for teeing that up for me so well. You've talked about $12 trillion of assets focused on this, frameworks being developed, Task Force on Climate-Related Financial Disclosure, TCFD, SASB, IFRS, and others. So this evolution of frameworks, which is important for the accountability piece, has certainly driven a lot of work for accounting and legal professionals and consultants. But from my perspective, I don't think that the engineering profession has yet been as closely identified with ESG investing as some of these other professionals have, despite the fact that engineering plays a critical role in ESG assessment, adoption, and adaptation. So I'm going to come to our panel with our headline question. Where is the engineering in ESG investing? And I'm going to start with Nicole.
Hi, everyone. It's a pleasure to be here today. Nicole Vidori, I'm VP and Head of Environment for TD Bank. It's a great question, and engineering in ESG for me comes in the problem solving. We're arguably dealing with one of the greatest problems that we'll face in our lifetime, climate change, and we need everyone at the table to solve this. And engineering is about transforming the infrastructure of our daily lives into the low carbon version of the infrastructure, so we can continue on, enjoy the lifestyles we have. But someone said to me recently, the E problems of today are the S problems of tomorrow. So how can we use engineering to really problem solve, understand what we need to do to change everything we use, our transportation systems, our heating systems, into the low carbon version, but still maintain the social equity, the social fabric that we all experience within our communities. And I'll just give you a quick example. I have 4 engineers on my team, And they are fantastic. I really appreciate the way that they approach problems. It's very structured and methodical. And they take a very holistic and, structured approach to solving problems. And to give you an idea of what they work on, it's quite technical even though we're at a bank. They work on figuring out what are the carbon emissions associated with our financing activities, so what we call financed emissions. They look at different pathways for aligning our lending portfolios to a 1.5 degree world. They also evaluate carbon offset and renewable energy projects to determine what the actual benefit to the environment is, and is this project a high quality project or not. So there's tons of technical expertise required in ESG, and those are just a few examples.
Great, thanks for those examples, Nicole. Let me go to you, Giselle.
Thanks, Claire. So, I work with Hatch. So Hatch is we are an engineering firm, but we're also an advisory firm. And so we span the spectrum from, business decisions all the way to the execution and implementation of those decisions. Most of our clients are the ones who are seeking the investment and then looking to deploy that capital to build the assets that Nicole described. And so, certainly with respect to how they are looking at deploying and best using that capital, they have to come up with, they're the ones coming up with the solutions, right? How are we actually going to engineer this project or this asset in order to meet the guidelines, the reporting, that Ron described as well. And so, I think the E in ESG investing from a perspective of this, for me, is very much actually in the how do we solve the problem in real time in a practical lens that's still going to allow us to operate the thing. At the end of the day, the lithium needs to come out of the ground, the cobalt needs to come out of the ground. We still need to do all those things, but we need to do those things in a way that is responsible to the environment, to the stakeholders, to our shareholders, and coming up with those solutions. And so that technical problem solving along the way to achieve, those outcomes to me is critical, because you're, in a sense, they're trying to thread the needle on really marrying all of those sometimes conflicting objectives, and engineers are well placed to come up with those solutions.
Yeah, I think you're exactly right about the skill set that engineers have in terms of finding those solutions. Brad, you're educating engineers, so I want to come to you with this question of where is the engineering in ESG investing?
Yeah, thank you. From the perspective of someone teaching students and also being involved in research, technology development, it really is at the realm of teaching students about the problem-solving skills that have been alluded to, but also really broad systems approaches. Because the types of things that we do, like Nicole, as you say, some of the things that we do today could be the social issues of tomorrow. So from an educational perspective, we are trying to instill an understanding of not only the systems that we have today, but how we can make systems resilient, how we can anticipate these types of problems perhaps before they really become a serious problem, and mitigate them. And the systems approaches that we use from an environmental perspective, from a technology perspective, are really key to meeting those goals.
Fantastic. I want to come back to Ron on this question. Ron, you led one of the largest and most respected pension funds in the world, really a global player. And you serve now on a number of boards where, as you say, ESG is table stakes. So talk to us a little bit about your perspectives on the role of engineers and engineering in ESG investing.
Engineers are the solutions, the solution to all the problems that we're facing. They're critical to it. I'll break it down quickly into three areas. Where I see investing money flowing now is into retrofitting and modifying current operating plant. Example, Ontario teachers owned a company called Cadillac Fairview. Cadillac Fairview builds office towers and all sorts of things. When they build them, they have to build them to attract tenants along the way, assuming COVID hasn't changed whether people want to lease space or not. But definitely, they have to build buildings that are low operational cost and very, very, very environmentally friendly. That becomes part of their corporate statement. It becomes part of their operating costs. So money flows into that area when it comes to retrofitting, whether it's airports where you need to reduce noise pollution, carbon pollution, all of that is taking place. Brand new projects, offshore wind, that are
And I don't necessarily mean by ecosystem, the natural ecosystem, the environment, Mother Nature, but rather the ecosystem in Canada that's driving ESG investing. And I want to ask you specifically for a comment on commercialization. What are you seeing in this area? Elaborate on that a little bit for us.
Yeah, thank you. It's a really fascinating time because we've had a lot of work done over the previous decades where companies are now bringing technologies to commercial fruition. I've been involved in a few partnerships where a group out of the University of Alberta, for example, developed a technology, taking it through scale-up. I'm involved in the environmental and financial evaluations. They've got investments from major organizations around the world to build a facility to make renewable diesel out of low-grade oils. You've got technologies that are being deployed in existing refineries, the type of infrastructure renewal that Ron alluded to, where these types of investments are coming from oil companies or, for example, Nutrien making renewable ammonia. We're seeing these types of things being driven by policies, but also the foundation of that was technology development that's taken place over the past 10, 15, 20 years. It's a long time to develop these. And, I had a friend who said, yeah, it's working, it's an overnight success, but it was a long night. And that's true for all of these types of transitions. And so the things that we're working on in universities today, these new technologies, these new ideas, working them through the pathway to commercialization, ultimately become things that can be invested in and we can capitalize in on a long term.
Great, thanks, Brad. Ron, I want to come back to you on this ecosystem for commercialization. I mean, I think, we hear a number of laments in Canada that we just don't have a vibrant enough sort of venture sector, that we've got, great entrepreneurs in Canada, but they just can't seem to achieve that sort of scale and liftoff before perhaps they get bought out by others. So talk to us about sort of that, early stage, growth stage companies, drawing on your extensive experience in asset management, what would you say the sort of health of the investing ecosystem is around technologies that are going to be relevant for solving our ESG challenges?
I think you're absolutely correct, Claire, on that point. Canada has clearly a VC growth equity market, but a lot of large institutional investors will look at that as the higher risk end of the spectrum to put in dollars. And the concept of investing for the next 20 years with not any clarity about what might be at the end of the tunnel, in Canada in particular, is an issue. But it's changing. I want to jump in rapidly to suggest that it's changing. I can give you some examples. Looking around the world very rapidly, the same can't be said for elsewhere. The risk appetite in the US, the risk appetite even in the UK and in parts of Europe is a bit of a different animal. And as a consequence, money flows. And when it has to flow into this riskier development, new technology part of the ecosystem, it's sometimes a combination of government and private enterprise, and people who can take the longer view. And I know in Canada that is starting to happen much more regularly. People look to the US out of Canada and they see a lot of VC growth equity happening in new technologies, relationships with the universities all through the US. And I'm seeing more and more of that getting replicated in Canada, particularly in the AI space and a few others. But Canada needs to move that along a little bit. I think there's more that the federal or provincial governments could be doing in that regard. That's my own personal opinion, to facilitate that. But that is where breakthrough technologies, new operating technologies are going to come from. And while Canada historically has not been good at it, I will say it is improving. And I know hundreds of millions of dollars that are finding their way into areas inside Canada where this is in fact the case. It's coming. And so the ecosystem is critically important, and it involves, in my mind, the three legs on the stool. It involves academia, it involves the investors and the money, and it involves government. And finding the right balance to get that done without impeding progress is really, really important.
Yeah, so it comes back to some of those kind of tricky policy questions that you've already touched on. But I like your note of optimism, and I do want to do a shout out for what's going on right here at U of T. Of course, we have the Hatchery, which is a fantastic incubator program. CDL at Rotman has been a huge success and is bringing venture and private equity money, right into Toronto and right into U of T. So progress is being made, which I think we're really happy to see. But I think that there's definitely more to be done. So Nicole, I want to come to you because we've touched a little bit on financing for ESG-driven outcomes. And TD and other financial institutions have made their own commitments relative to their own operations along ESG lines, but importantly also in their roles as lenders to enterprise. So talk to us about what you're seeing in your role as VP and Head of Environment at one of Canada's largest banks.
Sure, yeah. And I just want to pick up on what Ron said. I really agree with the three legs of the stool. Banking sector is certainly one leg, and I do think things are changing. And how I see that is in 2020, TD announced net zero emissions by 2050, a commitment to achieve that. And not only with our operations, Claire, as you mentioned, but also with our financing activity. So that's huge. That is so significant if you think about all of the clients that TD Bank has and other banks for that matter in Canada, across different sectors, different geographies. That's a really huge commitment, and TD's a big ship, as are most banks, and it takes time. It's not going to happen overnight. And we need time to really chart the course and then course correct. But after we announced that, what was really encouraging is that the other largest Canadian banks followed suit. So now we have all of Canada's largest banks committed to aligning their financing and investing activities to net zero by 2050. That's monumental, and I just wanna pause there and make sure that people understand the extent of that, because that's one full leg of the stool that we now have in place and that we have committed. And it doesn't stop there, because the Canadian banks are banding together, and we've joined global banks in the same task. So we're all united under the Net Zero Banking Alliance. And this is a group of financial institutions worldwide committed to aligning their financing activities to net zero by 2050. So things are changing. We're all committed to it. And I'm really excited to see what the future brings.
Great, thanks, Nicole. A lot of work being done there, and big commitments, as you say, in our financial institutions that are really driving some change. Giselle, Hatch works all around the world in mining, energy, and other industries that have large carbon footprints or other environmental impacts, but which are also relevant to the green supply chain and energy transition. You know, we're not going to achieve what we want on batteries without lithium and other metals, for example. So can you draw on your international experience to give us examples of how ESG is driving capital investment in industry? And then, so I'm going to come to you on that question, and we've got a question here from the audience, a bit of a challenge. Which is that engineers are a part of the solution, but the audience member is pointing out that perhaps engineers are also a big part of the problem, and referencing creative solutions to extract more fossil fuels. So I want to come back to that question, and I'm going to come to some of our panelists on that. But Giselle, talk to us about your experience you know, globally. What are you seeing internationally on ESG and what industry is doing around this?
Yeah, absolutely. I mean, thank you for asking that, Claire. Our clients are making capital investment decisions today that are really going to influence what happens in the next 10, 20, 30 years. And so they really want to make sure that they're getting it right. What we're seeing is that there are a few things that they need to consider. One is building safe operations. At the end of the day, they have to operate this. They need to, of course, create those green supply chains, but they need to do that safely and sustainably as part of the operation itself. And so what we're seeing a lot of is a search for sustainable solutions that allow them to operate their assets, you know, mines, for example, safely. Working with a client right now who is building a new greenfields mine in the US, and they're looking at ways that they can use technology to remove people from the underground mine, so using automation underground as opposed to sending people under there. so creating that supply chain, but you're becoming also kind of more efficient in how you do it.
So a lot of intersections there, and thank you for bringing up other aspects of ESG. It's not just about environment. The social and governance pieces are important. And I think we're seeing that intersection, just to touch on fossil fuels. You know, one of the things that I think has been highlighted with the war in Ukraine is that European dependence on Russian gas, which was driven for you know, noble environmental reasons, reducing the use of nuclear power in Germany, for example, has created an unintended consequences that is having a significant impact, an enormous impact on people's lives. And so when we talk about energy transition, I think we need to recognize that it's a complex issue, and that we need a, you know, I'll say from my perspective, a kind of a smooth glide path in that energy transition. Maybe I can invite you, Ron, to comment on that. Certainly there has been a lot of focus with large pension plans about fossil fuel investment. You know, and I think the counter to that is this sort of glide path and the role that Canada plays, particularly as an energy superpower in fossil fuels, but in other forms of energy as well. Can you give us some perspectives on this?
Yes. I do look at this as one large transition, and every transition, and particularly this one on a global scale, has its ups and downs and learnings along the way. And from my perspective, you know, there was about 7 to 10 years ago a huge push into so many different areas. I'll take an example of you know, wind, electrical wind. Everybody rushed into that so rapidly as investors, that ultimately the pricing of those assets got to a level where you'd be better off holding 90-day treasury bills. And then it backed away. And then there's a next wave that follows on. And you start looking at smart grids and other things. Then a lot of money goes into that area, and then the pricing comes out and you start to step away. I think also amongst the large asset managers, there's somewhat of a belief that your first salvo should be to engage around these transition issues, particularly around fossil fuels. Engage with the companies, work with them so that their operating plant can be improved dramatically, because there is a transition period. We see what happens abruptly in Europe when you just sort of pull the current sources of energy out from underneath. And so I think this transition and understanding that we are learning as we go, we're adjusting rapidly. The financing will move in, the engineering technology can and does show up, but it's not a straight line and it's not a perfect line. It's like anything of this magnitude you're trying to accomplish, it's going to have its lessons learned along the way. And it requires an agility and a continued focus on where we're headed here. This transition, to me, is still going to have over the next decade little cracks that are appearing in many places, more than little cracks appearing. But that doesn't mean we won't get there. It just means that there's other problems that are going to have to be solved quicker and faster. And of course, those are the areas that might likely attract more capital from the investing community.
Right. Well said. So some sort of, you know, kind of ups and downs along the way, but the trend is clearly in the direction of the energy transition. And I think that, you know, we can look at what's going on within Canada and our own behavior, and also look at Canada as an energy supplier in the world, and to the extent that Canada's fossil fuels are displacing coal in Asia, for example, maybe that's a net win. It might not be the end state that we want, but it is it's an incremental positive step. We've got another question here from the audience, which is a great segue to our next question. So I'm going to pose this. there's a particular question here, but there's a larger question that I'm going to wrap around that. So there are a lot of positive steps at the national level, for example, towards net zero and sustainability. But nonetheless, these can encounter opposition at the local level and even divide communities, dare I say, NIMBYism. So there are some competing values here, trade-offs and frictions, and how do they fit within decisions on ESG investing? And so that's a particular question that I'm going to, again, wrap this larger question around because it's a perfect segue. So there are frictions and trade-offs in all of these transitions, and it's important that we be clear-eyed about those. So I'm going to ask each of our panelists to talk about a question of trade-offs, perhaps with an example. And I'm going to start with you, Brad.
Yeah, thank you, Claire. Indeed, there are no perfect solutions, no perfect outcomes, and trying to manage those and understand them is, one of the things we can do as engineers. And I'll provide a specific example. We could displace about 60% of our liquid transportation fuels right now, gasoline and diesel, with renewable liquid fuels. That would require significant investment. There would be some impact on arable land. And so how far can you go and how quickly can you go in making that kind of transition? And land and these types of resources are really important. So I think the other thing that it underscores is that there is no one solution. We need a whole host of solutions that are available to people worldwide because our economies, our livelihoods depend on energy. And being able to provide energy for people to thrive, while at the same time reducing the GHG intensity of that energy is just critically important.
So there might be a variety of solutions, some better suited in some environments than others. Nicole, let me come to you on this question of trade-offs.
It's definitely a complicated question. There's many, many stakeholders, different opinions, and it's really hard to find a solution that fits everyone. But I think the friction that I see is behavioral change. Change is really hard and people do not want to make the trade-offs. Maybe they think it won't make a difference, but it will, and we all need to do it collectively. And if we talk about energy, that's the biggest trade-off. Brad, you said everyone needs energy. Yes, we do. We talk about, like TD Bank gets criticized for financing fossil fuel companies. But the quickest way to reduce production of fossil fuels is by reducing demand. So not until we have those solutions in place, our EV network set up, the infrastructure in place, to be able to reduce our demand or our dependence on fossil fuels, that's when we'll be able to reduce production and reduce the consumption of fossil fuels, which is leading to greenhouse gas emissions.
And I should say that there's a lot of work that is being done in Alberta and elsewhere on carbon capture, for example, and storage. So I think it's important to remember that there are other technology answers to this, because the world is going to continue to need more energy safely, efficiently, and cleanly. Giselle, let me come to you on the question of frictions or trade-offs.
Oh boy, where to start? So I'm going to frame this, a little bit different. I've been thinking about this question, and I think one of the biggest frictions to me is our mindset around this. So, I think I'll be a bit, provocative here. We've collectively come to this idea that, through this transition, it's going to be more, how can we give up the least, as opposed to how can we collectively make more out of this transition. a different problem statement. And so, so perhaps we need to restate the problem statement of what we are trying to do here. And if I take the analog of the tech sector 20 years ago, where we all were using landlines, like no one could have predicted what we have today. And I think it's the same with our view of the world in 2050. Like our minds are constraining us because we're really thinking about life in 2050 as, well, it's life like today, but we've got EVs instead of gas-powered vehicles, and our houses are powered with solar instead of, but maybe it's something completely different that we haven't imagined yet. And so reframing the, that problem statement to make it something more exciting, view of the future, I think to me, the friction is really in perhaps our approach to the problem as something to see how could we lose the least as opposed to how can we collectively make more.
Yeah, I think that's really insightful. Sometimes you need a better question, not just a better answer. I'm going to go to Ron in just a minute on this question of trade-offs and frictions. We've got another question in from the audience, and I'm going to come back to you, Brad, on it, and that is, how important is it for engineers to come together to help shape public policy? We often think about engineers playing a role in technology creation, in commercialization, sort of very heavy focus on the sort of technical and technology pieces. And as Ron, as others on the panel have talked about, the public policy environment is driving a lot of behavioral change. So I want to come back to you on is there a role for engineers in shaping public policy? And I just want to do a shout out at engineering to iLead, which I think is something that is sort of paving the way for engineers to play a role in leadership and policy. But I'll come back to you on that, Brad. First, let me go to you, Ron, on frictions and trade-offs.
In my experience, there have been in the early days and very recently frictions. I'm going to come back to the policy issue. The federal government might have a view of where it wants to go. The provincial governments may have a slightly different view. And of course, by the time actual things boil down to the municipal level, it can be even different again. And so there is a friction in there that's pretty critical. One area that I've seen is on the subject of infrastructure. The feds own all the big airports across the country. But that's not much. The provinces, by and large, and the municipalities own most of the infrastructure. Where there's lots of capital that would like to adjust and modify and make energy efficient, that infrastructure, it will often get bogged down in between the different levels of government, which is changing. It will be forced to change at some point in time. I'm the eternal optimist on all of this stuff, but those kinds of frictions absolutely do exist. Have existed, and I think if we had a better coordination at all levels, and I keep coming back to this, I firmly believe that between universities and large investors and different levels of government, if we had a integration that made sense, that there's got to be a way to make that happen. I think one of the issues is, I read a poll. We actually saw polls where 65 to 70% of the Canadian population believed very strongly that the government, federal or provincial, should be the only person involved in infrastructure, building out new infrastructure in Canada. There's a strong belief that we pay taxes, and those taxes should result in efficient and environmentally friendly infrastructure across the country. You have to ask yourself how many high-speed trains we have in Canada, even in the US, versus what you'd see in Europe or elsewhere around the world. There are differences here of a policy nature that are not insignificant, and public opinions around this. So there are tensions there. I believe it is changing, and engineers definitely need to play a role in highlighting the solutions that are available, what the future can look like, what we are capable of doing once our collective is focused in the right direction with the right goals. Engineers have a lot of credibility. They just happen to be very humble and very focused on solving problems as opposed to standing up and creating a big limelight. But engineers are the solution to this whole thing, and they are ever present. Whenever I witnessed we were moving in a direction just to invest in solutions, it was always the engineers that you had to put your faith and trust in.
Well, that's great. Let me go to you, Brad, quickly on this question of role for engineers in public policy. We're in our last 4 minutes, so after Brad's answer, I'm going to go to a speed round and just ask each of our panelists for a 30-second takeaway that you want to leave our audience with. But Brad, over to you on engineers in public policy.
Yeah, thank you, Claire. A critically important role for engineers, and I'll provide a direct example. Over the last 7 or 8 years, I've had the opportunity to serve on a UN agency panel, International Civil Aviation Organization, representatives from around the world, where we are evaluating pathways for sustainable aviation fuel, which covers environmental metrics, sustainability metrics, governance, deployment, policy. And it is shaping policy decisions around the world about how to decarbonize that particular sector. And it requires that kind of systems analysis and the problem-solving skills that really are part of engineering, but really on a global platform, being able to have an impact.
Great, great, thank you. And a very interesting example that you give there with your own UN Civil Aviation Agency work. So speed round, I'm going to start with you, Nicole. 30 seconds, a takeaway for our audience from today's panel.
I'm going to steal what Giselle was talking about, inventing solutions that we don't even know about yet, the unknown.
Our audience here with us in the My Health Center and virtually. You've been a super engaged audience. I'll just say that 80% of you said that engineering or ESG investing is relevant to you. That number may be higher at the end of this panel. And 65% of you think that the engineering profession has a larger role to play in ESG investing, with about 7% saying no and 29% unsure. I expect that we have taken that 26% and converted some of them thanks to the great conversation that we've had today in our panel. I want to thank our panelists for being here with us. And I want to thank Chris Yip for hosting us at Engineering Research Days. And thank you again to you, our audience.